Dear students, welcome to the comprehensive step-by-step tutorial on how to trade the 1H time frame. Let's do this. So we have 6 steps that we are going to discuss in this video with very clear examples. So step number 1 is Fibonacci retracement, which is going to help us with direction. Step number 2 is Asia box. Step number 3 is our EMA. Step number 4 is the average true range. Step number 5 is the signal. And step number 6 is the MACD indicator. So first of all, it's all about understanding what's happening in the previous day. So this is our previous day. This is our current day. Whenever we are on our current day, we must always look to the left. Look towards the left and understand what's happening in the previous day. That's very important. So what do? Because the price is going downwards, we fib the previous day from the top left of the box of the whole day into the bottom right, and then include the Asia session. Include the Asia session. Our Fibonacci should include those 3 levels: 0, 0.618 and 1. Make sure you put here percents. So 61.8%. Our Asia session needs to be below the 61.8% level. That shows that the market is bearish. So that's step number 1 complete. Step number 1 identifies direction. Okay, so now we are on to step number 2, the Asia box. Asia box has to be below the 61.8% level in the Fibonacci retracement tool. Okay, this is a trend following strategy. Okay, so we are identifying how strong is the trend. So sometimes the Asia box is close to 61.8, sometimes this is right on this edge, but typically it's just a good level for the price to be. So now, step number 3, the 50 EMA. Let's click on it. So how do you get the 50 EMA? Just simply go to the indicator section over here and tap multi EMA. Select any of this and then make sure that your EMA is set at 50. So that means that the EMA is calculating the average direction of the last 50 candles. That's all it means. 50 candles is a nice EMA because it is quite close and tight to the price. It's not too elusive. It's not too far away. Sometimes the EMA is all the way here, and that's no use for us. So 50 EMA is at a good close level to the price. Okay, which is another confluence to the market direction. Okay, so that's that. We just keep it in the background for us to know what's happening. And then we have an average true range. So you see this section where we have a gray shadow, all the sections here. Okay, all the sections here. That is actually an indicator called the super trend. So you go into your indicators, type super trend. This is it right here. Once you click on it, you are going to get this average true range length 10, factor 2, and time frame 1 hour. In terms of the style, I have it. So this section is blue, this section is black, so that it matches my color scheme. Click OK. So what is the purpose of the average true range? The average true range is almost like the EMA, but it calculates the average range of the price direction and the momentum. It shows whether the momentum is still bearish or bullish. So the EMA, which is this black line over here, all it calculates is the average direction of the price, last 50 candles. But this indicator, which calculates the average true range, actually calculates the range and the momentum of the candlesticks. Okay, and the length is 10, so it's very, very tight, which shows it is more confluence for us to understand, okay, cool, the price is still very bearish. As we go through more examples, you will see how beneficial it is to have this in your chart, just at the background. The more we think about what is happening on the charts, the easier it is for us to process information. So let the indicator do the thinking for us. Okay, it's about making our lives easier. Now, I can do all these things without the indicator. However, if it's there, it causes no problem. It's clean, it's not cluttering the whole chart, and it gives me the information that I need very quickly. So then we are waiting for the signal, step number 5. Step number 5 is that we just wait for a 1H engulfing. So during the London session, that's an Asia box, we wait for the 1H engulfing. This is 7 a.m. close. Once this happens, that's our sign that we should be entering the market. Okay. Now, what is the purpose of step number 6, MACD? Okay. So the MACD is another indicator that simply shows to you when the momentum shifts. Okay. So let me just expand this section right here. So now, let me just move it to this section. So as I play it forward, you can see that the candlesticks are going upwards. So this is a pullback. Let's not forget that this doesn't mean that the price is going up. MACD is not showing us that. All MACD is showing us is when the momentum actually shifts. So we can see that the direction is bearish. For that, we had our Fibonacci, 50 EMA, average true range. Everything is pointing downwards. What MACD does is it gives us an extra helping hand to understand when the momentum actually shifts. So as you can see, it's still going up. Still going up. Boom. So all these candles are dark blue. This candle is light blue. Okay, which shows that there is the momentum to the upside has stopped. Okay, and now these two signals, we have 1H engulfing plus this MACD. Okay, shows us that, okay, cool, the price is now prepared to reverse. And there we have it. Price goes to the downside. So with the MACD, what is our settings? Double click on that. So I have removed so these two lines is going to be in there by default. I removed that. I only have, so the inputs are going to be 12 and 26. 12, 26, close, 9. In terms of colors, so the above grow is this blue, and then 4 light blue, and then below grow is black, and then below grow 4 I put it to gray. But this is how it is on my chart right there, so everything matches, so that I don't have any conflicting colors on my chart. So that is a bearish example on how to use all these indicators. It may seem a lot, but it actually isn't. They're all there, clean on your chart. And if you can utilize all these things at the same time, you will have a much easier time identifying when to actually enter the market. And now we are off to a bullish example. Okay, so here is a bullish example. Let's go through all the steps. Step number 1, we have to look at the previous day. So this is the previous day, and this is the current day. You always need to look at what is happening on the previous day. That's very crucial and that's very important. So the first thing that we are going to do is fib the previous day from the bottom left to the top right and include the Asia session. Include the Asia session. Step number 1 complete. Okay. Step number 2 is Asia box. Asia box needs to be above the 61.8% level. It needs to be above the 61.8% level, and as you can see right here, it is. Okay, so now that we have identified the direction of the price and where the Asia box is in regards to the Fibonacci retracement levels, okay, we now consider the 50 EMA. Is price above the 50 EMA? Yes, it is. The 50 EMA is this black solid line over here. Price is above it, which means that generally speaking, price is still trending upwards. Very simple, no complication. The less you use your brain, the better decisions you can make. Okay, and the less anxiety you have about entry. Now, average true range, which is super trend. As you can see, everything is blue. Blue just means that so all this blue shadow, this whole blue section is simply an area of the average true range. Is the area of the average true range, and is showing that the average momentum is still very bullish. So let's just see how it was going to happen during the London session. As you can see right here, it's still blue. It's still blue. It's still blue. It's still blue. Sometimes what the price is going to do is that it will break the average true range area, the super trend area, and that just could signify that the momentum is actually changing and that the bears are taking over control. Okay, so when you have the whole of Asia and your area of entry the same color, the EMA is pointing upwards. We had the confirmation of the Fibonacci retracement level. All of these things are pointing upwards. Then you get a 1H engulfing signal. Step number 5, confirmed by the MACD. If you look at the MACD, we have gray, 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 followed by a black solid here, black solid bar. You can see it right here. It's going downwards. Look at this peak. Suddenly, the peak changed, and this level has gone up, which coincides with what is happening right here on the price. So this, we have so many signals right now. We have so many confirmations that we don't really have to doubt. All we have to do right now is just enter the price and aim for a 3% minimum. There we go. Play the price. Boom. Nothing complicated. We do have several indicators, but these indicators are there to make your life much easier. Now, I'm a fan of price action trading, just clean chart, but these indicators are going to make your life much easier. Okay, they remove the amount of time that you need to think about what is happening on the chart. All you have to do is flick through the charts. Whichever charts are following these steps, you favorite them, you wait for a strong signal, you wait for a confirmation on the MACD, and you place your entry. Okay, religiously do this day in and day out, and you're going to massively improve your win rate in Forex trading. So if you have any questions, send me a message as usual. I'll see you guys within Discord. Take care.